Okay, I have to be honest with you. When I first saw the stack of research for today's deep dive, I thought I was reading a typo.
Yeah, I get that.
Or maybe, one of those AI-generated headlines that malfunctions and just mashes two completely unrelated things together.
It does have that vibe, doesn't it? Like
Mm.
Elon Musk buys a grilled cheese sandwich factory.
Exactly. But this is real, and it's real money. We're looking at a headline involving a massive cryptocurrency treasury company,
Right.
basically a corporate dragon sitting on a multi-billion-dollar pile of Ethereum, investing $200 million into MrBeast, a YouTuber.
It sounds completely absurd on the surface. Why would a crypto treasury care about a guy who, films himself surviving in a grocery store?
Right.
When you actually peel back the layers, and we have a lot of layers to peel back today, this is probably the most significant economic signal we've seen in the creator economy in like the last 5 years.
That is a bold claim, because usually when I say crypto and influencer in the same sentence, I instinctively grab my wallet and run the other way.
And you should. It usually means a scam is coming.
Exactly.
And we will get to the scams because those are definitely out there.
Yeah.
But this isn't that. This is not a sponsorship. It's not a brand deal.
So what is it?
We are looking at press releases from BitMine Immersion Technologies. We're looking at investment analysis from Will Ventures and some very, very telling job postings from Beast Industries.
And what these sources are painting is a picture of a new business model, something the analysts are calling the creator holdco.
Right, holdco, as in holding company. And frankly, this model changes everything. It changes how we think about entertainment, how we think about banking, and honestly, it explains why MrBeast's content business, despite having more views than any network TV show, actually loses money.
That was the stat that made me just stop scrolling. We're going to get into the weeds on that because the numbers are just baffling.
They are.
But before we get to the YouTuber, we have to understand the money. We need to talk about this company, BitMine Immersion Technologies.
The fresh money wheel.
Right. Now, looking at their ticker, BMNR, and their name, BitMine, I just assumed they were miners. Warehouses full of noisy servers solving math problems.
And that's part of their history, sure. But if you look at their latest strategic release, they have pivoted hard. They don't call themselves a miner anymore. They describe themselves as an Ethereum treasury.
Which sounds a lot more dignified, a lot more like a central bank.
It's surprisingly accurate, though. Their core mission, and they have this catchy internal name for it, the alchemy of 5%, is to acquire 5% of the entire global supply of Ethereum.
Okay, pause there. Alchemy of 5%. It sounds like a quest item in a video game.
It does.
But functionally, what does that mean? How much Ethereum is that?
It is a staggering amount. As of January 2026, the data shows BitMine is already holding over 4.14 million ETH.
Oh.
That puts them at roughly 3.43% of the total supply. So they are, 2/3 of the way to their goal.
And in real money, what's the balance sheet looking like?
Total assets, so that's their crypto holdings, cash, and what they call moonshot investments,
At it.
sit at about $14.2 billion.
14 billion.
And here's the context that really matters. They are currently the #1 fresh money buyer of ETH in the world. This isn't some startup in a garage. This is a market mover.
But here's my question, and I think it's a reasonable one for any investor. Why? Why sit on $14 billion of digital coins? If they just hold it, isn't that incredibly risky? It's just sitting there.
That's where the treasury model is different from just being a bag holder. They aren't just letting it sit. They are deploying it. Later this year, BitMine is launching something called Maven.
The Made in America Validator Network.
Exactly. And this brings us to staking. Now, I know eyes tend to glaze over when we talk about blockchain mechanics, but think of it this way. To run the Ethereum network, you need validators. These are the computers that verify transactions.
Yeah. So the people checking the ledger.
Right. But to be a validator, you have to put up collateral. You have to stake your Ethereum. It's almost like buying a license to operate a toll booth on a private highway. If you own the toll booth, which is the stake, you get to collect fees from every car, every transaction that passes through.
Okay, that makes sense. So because BitMine owns, 3.43% of the supply, they can open a massive amount of toll booths.
Precisely. And the toll booth business is good. Their projections show that once Ahmad is fully scaled, their staking revenue could be over $1 million per day.
$1 million a day,
Yeah.
just for owning the asset.
That's the alchemy. You take a static asset, you plug it into the network infrastructure, and it just prints yield. We're talking about $374 million a year in revenue.
And that's separate from whether the price of Ethereum goes up or down.
Totally separate. It's an operational yield.
Okay, so I get BitMine now. They are a financial fortress. They have institutional discipline. I saw their chairman is Tom Lee.
Yes, and that's a huge validation factor. Yeah. Tom Lee is a Wall Street veteran, ex-JP Morgan. He's been in the game for 30 years, runs Fundstrat.
Right.
Having him at the helm means this isn't just, crypto bros throwing money around. This is institutional strategy.
So we have a $14 billion treasury run by Wall Street vets, generating $1 million a day in toll fees. Why on earth do they take $200 million of that and give it to Jimmy Donaldson? Why invest in MrBeast?
That is the $200 million question.
I mean, I love the videos, but is he going to? What? I mentioned Ethereum in a video. I bought this island with ETH. That seems so small for a company this size.
And that's where people get confused. They think this is a marketing spend. It's not. This is an equity investment.
An equity investment.
BitMine bought a piece of the company, Beast Industries. And if you look at the clues, specifically the trademarks and the hiring, it's clear they aren't investing in a YouTube channel. They are investing in a fintech platform.
Fintech, so banking.
MrBeast has filed trademarks for MrBeast Financial. And Tom Lee went on record saying he sees this deal as the merger of the creator economy and DeFi, or decentralized finance.
MrBeast Financial, I have to be skeptical here. Do we really think people are going to bank with the guy who blew up a train for a video? It feels like a stretch.
It does. Until you look at the job postings, we pulled the list of open roles at Beast Industries.
Let's unpack those. Because they're not hiring for a video editor or cameraman?
No. They are hiring a director of ML data architect. They are hiring an ad tech product manager, an accounting manager for consolidations, and a senior systems engineer.
Okay, a director of ML data architect is not someone you hire to optimize thumbnails.
Exactly. You hire that person to build a neural network. You hire a senior systems engineer to build secure, scalable infrastructure. These are roles you'd see at PayPal or Square, not a production studio.
So the thesis is, MrBeast is building a technology platform, and BitMine is the backend.
That's the most logical conclusion. I mean, imagine a world where MrBeast launches a financial app, a wallet, a debit card, whatever, and the back end of that app, the plumbing that moves the money, it runs on Ethereum, and it's verified by BitMine's validators.
It creates a closed loop.
Exactly. BitMine provides the rails, MrBeast brings the passengers.
But does he really have the passengers? I know the subscriber count is high, but does that translate to banking customers?
This brings us to the core concept of this whole deep dive, the creator holdco. And we need to look at the analysis from Will Ventures here because it explains the bizarre financials of Beast Industries.
This was the part that shocked me, the revenue versus the profit.
It's the aha moment. In 2024, MrBeast's revenue was reported at $500 million.
$500 million. Insane for a creator.
It is. But his content business lost $80 million.
He lost $80 million making videos. How is that a business?
It's not a business. It's a marketing expense.
Explain that.
Think of the videos as a loss leader. You know how Costco sells rotisserie chickens for like $4.99 even though they lose money on every single one?
Sure, because once I'm in the store to get the chicken, I buy a giant TV and a year's supply of mayonnaise.
Exactly. MrBeast's videos are the rotisserie chicken. He spends millions blowing up trains, building sets, giving away cash to get 377 million people to walk into his store.
So he loses 80 million on the videos.
But he funnels that attention into the high-margin products.
Yep.
Feastables, his chocolate brand. That division profited $20 million. Or his burger chain. Or, in the future, his financial app.
So the holdco model is basically build a massive audience by burning cash on entertainment, then monetize them through a conglomerate of boring, profitable businesses.
It's the Disney playbook. Walt Disney didn't make his fortune on the box office receipts of Snow White. He made it because Snow White convinced you to go to Disneyland and buy the plushie.
The movie is the engine. The merchandise is the fuel.
And that's why Beast Industries is seeking a $5 billion valuation, which is in the report. It's not because of YouTube ad revenue.
Right. It's because they're building this vertical conglomerate.
Correct. You don't value a YouTube channel at $5 billion. You value a holding company that owns a food tech giant, a fintech giant, and a media giant at $5 billion.
It makes sense from a survival standpoint, too. I mean, being a YouTuber is a grind. We've seen so many burn out.
It's an impossible treadmill. If you stop posting, the algorithm kills you. But if you pivot to a holdco model, you de-risk your life. If people get tired of the videos, the chocolate brand still exists. The bank account is still active. He's diversifying his own existence.
But there's a massive risk here, and we have to address it: reputation.
Yes.
As soon as you say crypto and YouTuber, the audience, and rightly so, gets defensive.
So
We have seen so many scams, pump and dumps, rug pulls.
it's a minefield. And it's the biggest threat to this $5 billion valuation.
So, straightforward question for the listeners who might be Googling this right now. Did MrBeast launch a coin? Is there a MrBeast token included in this deal?
We need to be absolutely crystal clear about this. No. The source material is explicit. MrBeast has not launched a token.
But if I go to a decentralized exchange right now and type in MrBeast, I'm going to see something.
You'll see a dozen of them. MrBeast coin, BSBeast,
I think
BFS.
these are...
Scams, vaporware, unauthorized projects, just trying to leverage his name to steal your money. If you see a coin with his face on it, do not buy it.
And what about those videos on TikTok? The ones where he's sitting in a podcast studio saying, "Send me ETH and I'll double it."
Deepfakes, AI-generated scams, they are rampant.
It's scary how good they are getting.
It is.
But, okay, so he hasn't launched a coin. But the sources do mention some on-chain analysis from Arkham Intelligence about his wallets.
Right, and this provides some important nuance. He hasn't issued a coin, but he is an active participant in the market. Arkham tracked his wallets and found he bought about $114,000 worth of a token called Aster.
So he's a trader.
He's an investor. He's dabbling. But that is fundamentally different from using his audience as exit liquidity.
That distinction is key. He's risking his own money, not asking the audience to risk theirs on a speculative asset.
Exactly. And honestly, MrBeast has gone on record saying meme coins feel icky.
Icky.
It's not a technical term, but it shows his mindset.
Yeah.
He knows that one bad crypto scam could destroy the trust he spent 10 years building.
Right, and you don't torch a $5 billion holdco for a quick $1 million scam.
The logic just doesn't work. And the involvement of the other investors signals that. You look at BitMine's cap table, you have Kathy Wood from ARK Invest, you have Founders Fund.
The people who backed SpaceX and Airbnb.
Exactly. They don't usually put money into rug pulls.
So let's try to synthesize this. We have the fresh money whale, BitMine, wanting to own 5% of all Ethereum. We have the creator holdco, Beast Industries, wanting to be the Disney of the 21st century. And they are merging. What does the future look like if this works?
I think it redefines the scale of the creator economy. We are used to creators being internet famous, but this is like nation-state famous.
The sources mentioned BitMine is the 44th most traded stock in the U.S.
Right. It trades more volume than Home Depot.
And Beast Industries has a subscriber base larger than the population of the United States.
So we're talking about two entities that are statistically larger than many actual countries. If they succeed in building this closed-loop financial system, I mean, imagine the implications.
Walk me through that user experience, the closed loop.
Okay. You're a fan. You watch a video where Jimmy builds a city. In that video, he announces a new Beast Burger promo. You open the MrBeast app on your phone. You order the burger. You pay for it using a balance you keep in that app.
Okay.
Behind the scenes, that transaction is processed on the blockchain. The fees for that processing go to the validators. And who owns the validator?
BitMine.
And who owns a chunk of Beast Industries?
BitMine.
BitMine. The money just circulates within their ecosystem. It's efficient, it's profitable, and it captures value at every single step.
It's incredibly smart. But is it just me, or is there something a little dystopian about a YouTuber owning the entertainment, the food, and the bank?
It's the ultimate company town. You live in the Beast ecosystem, you eat the food, you watch the shows, you store your money.
It makes you wonder about the content itself. If the video is just a loss leader, if it's just a glorified commercial to get me to use the banking app, does the quality of the art suffer?
That is the big risk. If the metric for success shifts from did the audience laugh to did the audience sign up for a debit card, the content changes. It has to.
Right. You start optimizing for conversion rates instead of joy.
But the counter-argument is that if the content gets bad, the funnel breaks. If you stop watching, you don't buy the burger. So in a way, the holdco model demands high-quality entertainment to keep the machine running.
That's a hopeful way to look at it.
It's the only way it works, really.
So for the listener who is just trying to keep up with the world, what's the takeaway here? Is this just a MrBeast story, or is this a trend?
Oh, this is a trend. MrBeast is just the icebreaker. Will Ventures predicts we're going to see a lot more of this. Creators realizing that merch is small potatoes. The real game is equity. The real game is infrastructure.
So watch the plumbing.
Watch the plumbing. When your favorite creator launches a product, ask yourself, is this a white-labeled t-shirt, or are they building a company? Because the smart ones are trying to become institutions.
And the really smart ones are partnering with institutional finance to do it.
Exactly.
It's a lot to process. We've gone from burying yourself alive to owning 5% of the global financial layer.
It's a wild timeline we're living in.
It certainly is. Well, that's all we have for this deep dive. Whether you're staking Ethereum or just eating a Feastables bar, keep your eyes open.
And watch out for those deep fakes.
Seriously, don't send your Bitcoin to a TikTok video. We'll see you on the next one.